Hello traders, it is Sunday, January 26th. I always tell you, subscribe to this YouTube channel, turn on your notifications. You never know when I'm going to post a video. I felt that I really needed to post one this morning because we had some selling on Friday. We haven't seen heavy selling for quite a while. So I want to be able to position myself for Monday morning. I don't know what the market's going to do. Was Friday's reaction to the coronavirus overextended? We won't really know until the markets open tonight. The S&P 500 futures will start trading in about 7 hours or so. Then we'll get a little bit of a feel for where the market is headed the next day. What we do know is that there are some visible signs of support that we can lean on. So right now we've got this longer term trend line, and that comes in at about 325 on the SPY. That's also a horizontal support level because that was a prior breakout. So 325 is a secondary support level. If we take and draw a trend line upward, you can see that it intersects almost at the low from Friday, and that's also a horizontal support level. Used to be resistance, breakout, now that's support. So we rested on that first support level at 327.50. That was also a number that I've been highlighting this week. 325, I believe, is the next support level. I have heard that the coronavirus is spreading. Nothing that I can put a handle on in terms of market impact. We won't know for a number of hours. We're not going to guess. What we're going to do is we're going to take a look at a couple of scenarios that could play out on Monday. And in the first hour of trading, we should know how to proceed. So these are the major support levels that we want to take a look at. If I had to go off of my gut feeling and what's going to happen, you can see this extremely strong market trend. This is going to be very difficult to turn. There's not a credit crisis. Just for future reference, a credit crisis is a spoiler. And if it starts to accelerate, that's the one thing that could really lead to a sustained market decline. There's no credit crisis. We have trade deals in place. We've got a very accommodative Fed. In fact, we have very accommodative central banks around the world. So those forces are in play. We have strong economic growth. We had the flash PMIs from Europe and Japan come out last Friday. They were excellent. Domestic economic growth has been good. Full steam ahead. That's why we've had this rally right here. Now stocks are a little bit overextended. They're trading at a forward PE of 18. So far the earnings have been pretty decent. Intel had a really good number last week. We've had a number of good releases so far. It's going to take exceptional numbers for stocks to be able to tread water at these valuations. So any missteps and the stock will pull back. If the stock meets expectations, it'll probably chop around with a slightly negative bias. If they really knock the cover off the ball, the stock might go a little bit higher. But in most cases, I'm expecting this trading range to unfold between SPY 335 and SPY 325, maybe 320. That's another support level, 320, maybe 320. And then we spent some time in that range during the first quarter, and the market has time to digest recent gains and to grow into that forward PE of 18. So we're expecting to see a pullback. That's why we only have a small percentage of our portfolio allocated to bullish put spreads right now. We're waiting for earnings season to unfold. This is going to be a huge week for earnings. We're looking for really strong results from companies, and we want to see those pullbacks, and then we want to go in and sell bullish put spreads below technical support. That's our game plan, so we don't have a lot of risk exposure right now. And Friday I was mentioning to swing traders, if you've got a lot of bullish put spreads on, you might want to buy some VXX. That'll be a hedge for you if the market does decline. You may want to buy some SPY puts as a hedge. I personally plan to hedge my bullish put spreads intraday. Friday was a fantastic day. Let's go in and take a look at the market action, and I'll be able to show you some of the warning signs. Before I go into the 5-minute chart, I do want to reference a sell-off that we had back in September. This is kind of what I'm expecting to happen. We get this pullback, corona, a little pause, another pullback, some more compression, another pullback. So it's a very herky-jerky stair-step fashion downward as opposed to boom, boom, boom. And that's because buyers are lined up. This is a very strong market trend. It'll be very, very hard to turn. Buyers are looking for excuses to enter. They'll be constantly trying to nibble, nibble, nibble as the market pulls back. So if by chance we do see a big flush out of bullish speculators with another long red bar closing on its low, and we start getting to some of these major technical support levels like 325 and 320, I'm expecting a bullish hammer to follow and for buyers to immediately step in. So I'm not projecting that. It could happen. Bullish sentiment has been very, very high. So the first wave of selling is usually pretty strong because those bullish speculators are out over their skis and they're forced to cover their positions because of margin calls. So that's just something to watch for. Programs can kick in. I mentioned that in my comments on Friday. So yes, we could see one of those long red bars closing on its low. It's not very likely because buyers are going to be nibbling, 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 always looking for that support. And then we could see a little bit of a stair-step pattern down like this if the coronavirus looks like it's going to impact global economic growth and if it starts really spreading. So too early. And when I mentioned Friday that sellers were hitting the panic button, they were starting to exit their positions, and that's why we saw that pretty dramatic sell-off. I've already recapped this in my previous video. I'll just say that when I saw this first price action right here in the first hour of trading, I knew we were going lower. Little pause here, and then the bottom fell out. We easily took out the low from the prior day, and you can see how, yes, we did try and rally off of those lows very, very late in the day. I also mentioned in my video last Friday that we probably wouldn't see any decent buying until the last half hour of trading. And there you go. So the mandate was stay short all day. Made fantastic money on my SPY puts, January 31 expiration. Sold half of the position for, I think, about a 70% profit. I also did a little lotto trade in here. I bought some puts with the expectations that that low would be tested again. Made 100% on that. So was able to make really good money Friday trading the short side. The keys to Monday's trading. So if we get a little pop up Monday morning and everybody takes a deep breath and everything seems to be going fine, and we see this pattern with long red candles closing on their low early on, that will mean that that gap higher will be challenged and then we'll probably see further selling. So the first half hour will be critical. Ideally, what we would like to see is we would like to see long green candles stacked one on top of each other with closes near the high of the candle. So two candles like this, one on top of the other with closes near the high, that would be a good sign that bulls are in control. So the first half an hour is really going to dictate what happens the whole day. I'll be watching that price action very carefully and providing play-by-play commentary in the chat room. Since we don't really know what the market's going to do tomorrow, I want to highlight some bullish stocks and I want to highlight some bearish stocks. So here's a real easy search that we can do, and we'll have candidates on both sides so that whatever curveball the market might throw us, we're prepared for it. So I'm going to go in and I'm going to click on custom search, and we're going to run a couple of basic searches here. So what would I want to see in a stock right now? What types of characteristics tell me that this stock wants to go higher? Well, first of all, we need good option liquidity. We're option traders by nature, so let's look for good option liquidity. A rating of 2 or higher would be good. So let's focus on the bullish side first. Let's also make sure that we have heavy volume, because volume enables that stock to have sustained directional movement. So we wanted to see heavy volume on Friday. I'd also like to look for stocks that have already posted earnings. So earnings date previous. I'm going to click on this and I'm going to go into January 1st. So the stock would have reported earnings already this year from January 1st to January 26th. Now I could actually go back just a little bit further and I could actually look for, let's say, beginning of December even, knowing that the company would not be announcing earnings yet. Let's do that. Let's cast a wider net initially. So we've got two really good criteria here. Excuse me. I'm also going to be looking for stocks that have exceeded the prior day's high. That would also be an excellent search. I'd also like to see a stock that has a daily buy signal, and I'd also like to see a stock that has good strength relative to the market on a daily basis and a 4-hour basis. Now this is a pretty tough condition for a stock to meet, and let's just review all the constraints that we have here. Good option liquidity, heavy volume Friday, previous earnings date, it's already reported, so we've seen a decent earnings reaction to the stock. Stock greater than prior day's high, relative strength on a 4-hour basis and a daily basis, and it's on a buy signal from our system. We may very well return no results. I don't know. Okay. 3 candidates. That's all we have to do. Do you see how long that took me? It took me maybe 5 minutes. All you have to do is input the qualities that you're looking for. So let's go in and take a look at AXP. And we're going to go into the daily chart here. AXP had a big breakout through this horizontal resistance. You can see the 132 level. This looks like a good stock. It was able to hold most of its gains on Friday. So we'll go into that 5-minute chart. And there you can see it pulled back. It opened higher initially. That's the big gap up. Pulled back, pulled back, pulled back. And then before the market bottomed out, let's put that SPY overlay up. You can see market's continuing to go down. Look at this sell-off right here by the market. Now this, if you're a day trader, you love this type of formation because the stock is compressing in here and then you know you're going to get a release as soon as the market finds support. So AXP held its own fairly well. The financial sector itself has been pretty soft, but AXP did well. Intel reported earnings after the close Thursday. Look at that strength. Runs up, makes a high, holds its own. Market down, down, down. And look at how strong Intel was all day. Even here, market had another leg down. Yes, the stock drifted a little bit lower, but as soon as the market found support, it wanted to move higher. It held almost all of its gains. So we're going to go into that daily chart, and there you can see this big horizontal breakout right here. Big gap up, stock closing near its high on a very, very weak market day. I like it. Next candidate, Netflix. I love Netflix here. You know I love Netflix here because I've been talking about it since Thursday. Talked about it Thursday, talked about it Friday. There's the initial reaction on Netflix. Comes down and tests the 200-day moving average, opens higher than it closes, hence the red candle. The next day, Friday, what does the stock do? Excuse me, this is Wednesday. Thursday, what does the stock do? Shoots higher, closing on its high, breaking out to a new all-time high. Enormous bullish engulfing pattern that takes out all of these prior days. That was super, super strong. And I did buy it Friday, and I made money on it Friday, and it closed pretty well. It was able to finish higher on the day when the market sold off, and it's about halfway up that long candle. I believe come Monday, this is going to be one of the stocks that you want to focus on. And you can see that relative strength here. Market down, market making a new low of the day by a substantial amount. What does the stock do? It doesn't make a new low of the day, not by a long shot. It wants to go higher. As soon as the market finds support, boom, gone. So these are 3 stocks that I think you can be long. I'm also going to eliminate some of these filters to see if we can bring in a couple of other stocks. For instance, boy, above the prior day's high is pretty nice, but let's see what happens if we take that off, or better yet, let's not put this constraint on that it had to have already announced earnings, and let's see what we get. Okay, considerably longer list. Now when we trade these, we can trade them, we just need to make sure that the company is not announcing earnings on Monday, which is unlikely because it's a Monday. So let's go in and take a look at some of these. We've already taken a look at AXP. Let's take a look at Boeing. Sell, 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 sell. I mentioned Boeing earlier in the day. In fact, this is one of the stocks that I like Thursday, and I had mentioned it. Really nice opening, but as soon as the market started to falter, long red candle closing on its low, that is a no-go signal. Here you've got the stock starting to move lower with the market, but then this explosive move higher. This stock wants to go higher, big volume too. So I like Boeing. Let's go into that daily chart and I'll show you why I like it. I love the fact that it came down, and this was a negative market day. We had selling that day. If the stock were going to continue to move lower, you would have seen it get buried after two long red candles like that, but it didn't. It found support and it closed near its high. The next day, the stock rallied and closed on its high. Look at this strength on Friday. Boeing is really nice. I think it's bottomed in here. I'm not saying go out and buy Boeing and hold it for the next 3 or 4 weeks. This is very weak price action. Boeing's had a lot of negative news with the 737. So this is a nice bounce that you can play. Maybe even consider selling bullish put spreads down below this low here at the 310 level. But I wouldn't be in the position for too long. We can certainly play a nice bounce on the upside. We've got this downward sloping trend line that the stock is about to break through. That would give it even more fuel to move higher. So looks like a nice candidate here to bounce. I certainly would like it Monday. If I were looking for long positions, Boeing would be on my list. Just gonna we'll keep going through the list here. Sienna, compressing, not doing much of anything. Intel we've looked at. Juniper, that's actually been a nice bullish put spread. It's just holding its own around that 100-day moving average. Not enough momentum for me to be interested in it. Netflix we've looked at. And I'm going to keep going down. SO, utility company, SQ. Let's see what that looks like. Not bad. Breaking out to a new high here. AXP did well. They're a payment processor as well. So the sector might be doing pretty well. You can see earnings on 226 here, but the stock is choppy. It's not what I want when I'm getting long. So forget SQ. STX. I like this one. This is one you can put on your list. Nice compression. Breakout. Grind, grind, grind higher. Big day Thursday. Trying to move higher Friday. Great relative strength on Friday. Let's take a look at that 5-minute chart on STX and see what it did all day Friday. There you can see the stock opened up. It wanted to go, 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 but it couldn't fight the market. Now, as the market is really getting pounded here midday, the stock is holding its own. As soon as the market finds support, boom. Nice little rally. STX looks really good. So, just going through this very simple exercise and going through these simple searches, I have my candidates for Monday. I like AXP, I like Boeing, I like Intel, I like Netflix, I like STX. If I had to pick a couple of charts that I like the best, it would probably be Netflix number 1, STX is a choppy stock but probably number 2, and then I would want to look at Intel and Boeing and see how they're doing. AXP, usually payment processors, credit card companies don't make monster moves, so it had a big move on Friday. I think it'll probably run out of a little bit of gas in here. And financials have been relatively weak also. So that's your bullish list. So now let's go in and take a look and see if we can find some bearish stocks. Here's how easy that's going to be. All I'm going to do is flip all of these signals here. So I'm looking for bearish trade signal on a daily basis. I'm looking for relative weakness on a daily basis. I'm looking for relative weakness on a 4-hour basis. And instead of a stock above the prior day's high, I'm going to be looking for a stock that's below the prior day's high. Well, almost every stock fits this criteria on Friday. So this had more relevance searching for bullish stocks than it does for bearish stocks. And I still want the heavy volume, and I still want the option liquidity, and let's go with the previous earnings date. So I want to find stocks that have already been selling off regardless of the market. These stocks have been weak. There's our list. These are the stocks. It won't take me long to go through these. So I'm going to move this off to the side. We're going to go into the daily chart. We're going to find ourselves one or two really good shorts. That is nice, weak price action. Market higher, that gray line, stock trending lower, relative weakness. So this is a breakout right here, a horizontal breakout. That breakout is failing. That means that the stock will have more downside down to that 32 level. And you might be thinking, well, that's only 1.5 points. One thing I'll tell you about BAC is it's got very, very liquid options that trade in penny increments, meaning a penny wide bid-ask spread. So, and they trade close to parity, meaning there's not a lot of time premium in these options, so they will move very nicely with the stock. I'm sure if you bought the 34 puts or the 35 puts, you could buy those for close to intrinsic value, and they will move point for point with the stock. So I like BAC a lot. I like the fact that this breakout has failed, and I think we're going to see more downside momentum. Citigroup, same thing. You can see, tries to break out there. This is a support level. Stock below that support, I had mentioned a few minutes ago. Financials have been relatively weak. JPM, I think, looks really good. Super, super liquid options. Here's what I like. There's your big breakout right there through horizontal resistance. That's a support level that's tested once, and now it has failed. Long red candle closing near its low. Downward trend in place, market higher, stock lower, earnings announcement already done. So, market doesn't like this stock, and I think negative interest rates are part of the problem. So, or the threat of possible negative interest rates in the US might be a possible problem for it, but in any case, we know technically the stock looks weak. MU, nothing to really write home about. Very choppy in here, a couple of bearish candles, but you can see there's no real pattern or momentum to it. TXN, this is pretty bearish. So, especially given that Intel had rallied like mad. On Friday, you would expect other chip makers to follow suit. And so initially, you can see the earnings announcement there after the close on Wednesday. Initially, Texas Instruments wanted to run. That was a nice long green candle there, but it pushed up to that 135 level. Texas Instruments did, and it sold off the whole day. This is a bearish engulfing pattern. The prior breakout has failed, and it had good sector news from Intel. It's a pretty weak pattern right here. So I think that on Texas Instruments, you might even consider selling it out of the money. 135, 136 bearish call spread. Try and get 20 cents for that. Stay in as close term as you can on that spread. But I think that could be a good one. I think the stock is going to struggle to get back up here. So that's another really nice one. WBA. Oh, that's a weak chart. Tries to hold that 200-day moving average, falling back. Now there's another weak stock that will look. This is Walgreens. And in that same space is CVS. I've been looking at CVS. I think it's also going to be weak. Part of the problem here, you can see the relative weakness. Market higher, stock lower, breaking below major horizontal support levels, major moving averages. Part of the problem here is that Amazon trademarked Amazon Pharmacy. And so now everybody knows that Amazon is preparing to get into the pharmaceutical business, and so all of the drug distribution outlets, the Walgreens and the CVS's are hitting hard times. We're going to take a look at CVS because that is another bearish looking stock. Downtrend, market up. You can see this little bounce in here. This little downtrend here was nice on the upside, and I thought the stock had a chance to challenge the high here and to keep moving higher. I like these long green candles closing on their high. We were selling a bullish put spread here. You needed to shut that bullish put spread down because we closed below our support level at $72. Yes, folks, I do have losers, and I try and fess up to them when I have them. But you got to close this bullish put spread down because the character of the stock has changed so much. If I had a bullish put spread on with a week till expiration, I would actually probably try and leg out of this position by buying my 72 put in and holding the long put with the expectation that the stock is going to get down to the 100-day moving average, and I would set the target on that put that I would be long equal to the price that I had to pay to buy in my short put. If I can do that and leg out of it successfully, I'll still make money on that trade. So I believe that the stock is very weak in here, and it's one that will move lower. So let's do one other thing here. Let's go in and let's take a look at the scan and see if there's anything that we can do to perhaps loosen up the constraints. If I take this off, I know we're going to have a ton of candidates come in. So it may not be, yeah, I knew that was going to happen. We've got a lot of stocks that are weak relative to the market. Now there's CVS right there. I did take a look at Disney. That one looks very weak as well. You can see the breakdown. The only problem with Disney is you've got a 100-day moving average and a 200-day moving average standing in the way here. $138 would be the magic number. It's got to get below that. I don't want to be shorting it here with these major technical support levels. CVS I already showed you. BABA also looked like a decent looking short. You've got your breakout here. Take off the SPY. You've got your breakout right in here. That's a failed breakout. Long red candle closing near its low. This is your key level, 212. If the stock gets below 212, I think that BABA could be another great short position. So that's how we're going to play things on Monday. We're going to make sure that we have really good stocks that we can trade on both sides. I think we're going to see some nice movement, and I think that there's a chance that we'll pull back early, stabilize, and then buyers will gradually come in. But it's the first 5 bars that are critical. I also want to say that if you do have a lot of bullish put spreads out there, you shouldn't have more than 25% of your account allocated, maybe 30% at this time. Most of the stocks that we've been looking at have been holding up relatively well. Make sure you watch those short strike prices for those short puts. If the stock breaches that technical support, you have to buy that spread back in. We've had huge winners over the course of the last 5 months. We knew that sooner or later in here we were going to get a market pullback and that we were going to take some lumps. This may be the time that that happens, and just make sure that you're hedging yourself with some VXX or maybe buying some SPY puts so that as the market comes back, you're able to make a little bit of money on your puts. And if you're in the right stocks and you're far enough out of the money on your bullish put spreads, which you should be, then you may actually make money on your bullish put spreads and on your hedge. So that's how I would play it, but we're really looking to add to our bullish put spreads on a market pullback and on stocks that get pulled back very, very hard on excellent earnings announcements and excellent guidance. We've got the searches for it. That strong after earnings search is definitely one that I'm going to be watching right here, and I'll be watching for all of these stocks to come in. That's it for today. If you like the content, please give it a thumbs up. Please subscribe to the YouTube channel. Turn on your notifications. You never know when I'm going to be posting these videos. The only thing that I can guarantee you is that they'll have lots of education and lots of great trade ideas. Thank you. Enjoy your weekend.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.